On-site coverage of the Precious Metals Summit is brought to you by Borealis Mining.
Grant Williams, welcome back.
Nice to see you again.
Look, this time last year, I think we were in a bit of a dip. We were in the Trump victory dip, weren't we?
Yeah.
If you remember, and it sort of seemed like it was the end of the gold bull run in a way. It was almost, you were being quite steadfast, obviously saying that depending on.
I've been steadfast in 20 years now. Let's just have it more than anything else now.
Well, no, but I think you were absolutely right. I mean, a lot of people were very nervous this time last year around what was going on with the gold price after the Trump victory, and the whole promise of fiscal responsibility and paying back the deficit, and then roll forward. Obviously, that didn't happen. We've seen another pullback. We're just chatting to Rick about that. But it's still fairly shallow. I mean, you look at all of these pullbacks we've seen. Every time we hit all-time highs, we see a little shallow pullback. This seems a little bit more sideways trading for a little bit longer. But I don't know about you, but for me, the fundamentals just have not changed in terms of gold. We've still got weaponization of the dollar. We've still got deficits. We've still got GDP debt ratios blowing out of proportion everywhere. Anything changed on your side?
Well, it's interesting because to me, it depends how far back you want to go. Because whenever we talk about people get nervous, it's always about the price, right? You get nervous about the price. And the price dictates so much for so many people around gold. And I think if the price is what you get excited or nervous about, then I don't know that you're really looking at gold as anything other than a speculative asset, which is totally fine, right? But for me, the bull case for gold hasn't changed in 25 years, never mind a year. All that's happened is there have been more and more reasons why you want to own gold. And I choose those words carefully because when you think about ownership of gold versus buying gold, they're two very different mindsets. You go, oh, are you buying gold? Yeah, well, anything you buy, there's an implicit idea that you're going to sell it at some point. Whereas if you say, oh yeah, I want to own gold, there's a much more of a long-term feel about that. So for me, the bull case hasn't changed. The bull case has gotten stronger and stronger and stronger. And there have been a couple of points along the way in the last 25 years where you could see potentially some of the planks of that bull case maybe weakening a little bit around austerity, around this idea that politicians might find religion and actually start trying to balance the books. But they never last very long because of the entire way the fiat monetary system is conducted. So for me, I can absolutely see we could correct down to the high 3,000s, no problem at all. If we went back to 3,750, 3,700, that wouldn't surprise me at all. No. People will get nervous because the price has moved. But if you step far enough back, if nothing's changed and we've just gone to 3,700 because we got ahead of ourselves, there's a lot of speculative capital come in, profit taking, whatever it may be, the reasons for owning gold have gotten stronger pretty much every year for a quarter of a century now, and I don't see that changing.
You sound like to me like the original hodler.
Yeah, well, do you know, it's really funny you say that, Peter, because I've always said when I've presented that the price wasn't important to me, and I've meant it. And I've also said that I'll never sell my gold, but with one caveat. Because it's not the price that I think about. When I think about selling my gold, I don't. But at some point, I'll exchange it for something that I want to own more. And it won't be about the price. It'll be about what exchanging that gold will buy me. And the example I always used way back in the day, when I first started talking about this and trying to make that differentiation, was that if I put 100 gold coins in a safety deposit box in a bank and just forgot about them, and at the time, those 100 coins wouldn't buy me a harbourfront property in Sydney, right? You fast forward 20 years, I might be able to take those same 100 coins and they've gone up in price and there's been a property crash, and I could now swap them for a harbourfront property in Sydney, and I might go, actually, for the next 25 years, I'd rather have the house. So I'll exchange the coins for the house. It won't be because the price is anywhere. It'll be because they will now buy me something I'd like to own more. And that mindset has been my mindset from day one. It's never been about the price. And I think if you go through and you look at the purchasing power of gold over the last 20 years, and you do it against things like the median home price, or I don't know, a Bentley convertible, or the things that you might want to own, you will find that your purchasing power has increased significantly in gold. There's nothing to do with the price.
I did this on an Excel sheet. I did the inflation adjusted prices, and I can't remember how far. I'd have to go back and look over the numbers, but it was something silly. Like you go back to the 70s, you basically can buy 10 times more with your gold today than you could back then. It's just
Exactly.
it's insane.
Or as I mean, and I'm a real pedant about this, but I say no, you couldn't buy it. You could exchange so much less of your gold for it, because the whole thing is mindset, really. Because gold it's gold. It's not a company. There's no cash flow. There's nothing to analyze. It's all about mindset. And so if you can get into the right mindset, that you're never actually buying or selling gold. You're either exchanging fiat currency for gold because you'd rather own the gold because you think it's going to protect your purchasing power, or you're exchanging your gold for something that you want to own more. It takes the price out, and that, to what you started this conversation with, you won't get nervous if the price falls, because you find, well, actually the median house price has fallen a bit as well, so I'm no worse off, even though the prices are $300 lower. And it's just that mindset thing that I think is so important.
Do you think that will ever change? Do you ever foresee a future where the purchasing power of gold or the exchange value of gold does not increase over time versus a fiat currency?
Yeah, absolutely. I fully expect that, but it won't be until politicians get their spending under control, till we do something about the debt levels. Once the system resets, and it can reset in a number of ways. Once it resets and you start to build on a foundation that's much more solid, and there isn't the danger of having your purchasing power eroded, and there isn't an imminent danger of inflation.
Is that a realistic future though, where could you actually see down the line, we live in a society where purchasing power isn't constantly eroded? Do you think we could ever get there?
We've lived there before. I mean, if you think about pre-1971, if you think about the pure gold standard periods, we've lived in those situations where there wasn't any inflation. It's a stretch, don't get me wrong, it's a stretch. But to say we could never go back there again, if the worst happens, the thing that the people who are genuine doomsayers, I get called a doomsayer all the time, but I don't think I am, but maybe I am, I don't know. But if we talk about a total systemic collapse, a complete loss of trust in money, hyperinflation, all the things that people worry about, the system will reset, right? And it will likely reset with gold at the core, even if it's temporary, just to stabilize the system. And under that kind of a new system, you won't be able to run up massive amounts of debt. You won't be able to inflate stuff away. And so, yeah, I can absolutely see.
But this is all based on the idea, though, that we would eventually go back to a gold-based system, right? So that's really the only way.
Well, we're never doing it through choice. It might be the solution to another problem, which is, how do we stabilize the monetary system? How do we restore confidence in the financial system? And right now, given the pure fiat nature of everything, gold is the obvious solution to that.
How would you do that? I'm just wondering how you would do that with deficits out of control. You've got these, debt to GDP levels so high. How would you be out, just practicality wise? How would any of these? You'd have to have a major event happen to be able to do the reset,
that's
right?
Because these things happen.
Because Trump couldn't just turn around tomorrow and say, okay, we're going to go onto the gold standard, because the liabilities are too. You wouldn't be able to pay Social Security. You wouldn't be able to pay anything, essentially.
I agree. But what if? How about if we had hyperinflation for a year? The debt will be gone. If you're paying that kind of money away in hyperinflated dollars, the debt's gone. But people have lost trust in the currency. So how do you restore that trust? You peg a new currency to gold, like they did in Weimar Germany. Even if it's temporarily, you say, right, well, here's what we're doing. We're pegging it to gold at $10,000 an ounce of gold, whatever it may be, right? That's a way to restore trust in money, to restore trust in the system. And over time, you can loosen that the way we have done over time. And it will get loosened over time because of the restraints it puts on it. But you can get back to that place. And in that sort of system, inflation will be very steady, very stable, if there is any at all. And you go back to this, the foundations of a monetary system, and you engender trust again. It takes time, but that's how you get there, sadly, through chaos and catastrophe.
Hi, I'm Kelly Malcolm, founder and CEO of Borealis Mining. We're reigniting gold production in Nevada, one of the world's most attractive mining jurisdictions. Our flagship Borealis project is 100% owned and fully equipped for production today, with power, water, workforce, permits, and even a modern ADR facility already in place. We've started crushing high-grade stockpiles, and our first gold pour is just around the corner. Historically, Borealis produced over 600,000 ounces of gold, yet much of our 21 square mile land package remains unexplored. With nearly 2 million ounces of historical resources and past drill results up to 67 meters at 16 grams per ton, the upside here is tremendous. But Borealis is just the beginning. Through acquisitions like our nearby Sandman project, with a strong PEA showing 35,000 to 40,000 ounces per annum and a $121 million NPV at $1,800 gold, we're building a hub and spoke model designed to deliver scale and efficiency. Our vision is bold: to grow into a greater than 100,000 ounce per year Nevada powerhouse within the next 5 years. With a proven team, strong shareholder support, including mining legends Rob McEwen and Eric Sprott as major backers, and multiple catalysts ahead, we're positioned for both near-term cash flow and long-term growth. Follow our journey at borealismining.com or connect with us at info@borealismining.com.
Okay. But up until that point, I guess, this sort of just bringing it full circle to where we are today, unless something like that happened, the rationale of why you're holding gold doesn't really change, does it? Essentially.
For me, no. No, I bought gold in 2003 for the first time as what I saw as a solution to my biggest problem, which was a deliberate debasement of my purchasing power by the government in order to mitigate the debts they're running up.
Did you carry on buying gold all the way through
Yeah.
sort of Brown's Bottom and everything else?
Because I always figured it was a long-term solution.
Yeah.
Never mind the price. If I keep my savings in gold, I should mitigate the purchasing power problem.
Really smart. Yeah. You're seeing now a lot of apps and a lot of different things coming through actually trying to offer that solution, aren't they? Where you get your salary paid in and they'll convert it straight to gold, etc. But you essentially did that before the tech was available, by the sounds of it. You were.
Yeah, well, I mean, look, I until 2003, I've spoken about this before. I didn't really care about gold. You know, I was trading Japanese equities, and
Yeah.
you know, the gold price was something that we were all aware of. I kind of understood what it meant when it moved, but I didn't really understand it. And it was only in the early 2000s when it became obvious that the solution, you know, having traded Japan, I was there for the original QE in the late 90s. So I saw that, and that raised a red flag. I then saw Greenspan's response to the dot-com bubble. Excuse me. I then saw the response to 9/11, which is lower rates, lower rates, lower rates. In Japan, we're printing money, so you knew that was coming at some point. And it became obvious to me, okay, if this carries on, my savings are going to be worth less and less every year. So what do I need to do to protect myself against that? And gold, the more I read, the more I understood that gold was the most elegant, most straightforward solution to that.
Yeah.
And I bought into that quite quickly. A lot of people don't. And for me, it just resonated. For some people, it doesn't, and I totally get it. But it did. And so I figured that was a long-term solution, and it's proved to do everything I want it to do and so much more. It's been fantastic.
Are there any other commodities that you're looking at the moment, perhaps not for the same reasons, but for different reasons, that you're quite bullish on and that you're quite?
Well, look, I think we're at the start of a secular commodity bull cycle. So, you know, being long commodities is going to be another. Again, long term, I'm not trying to speculate on the price and buy copper at 5 and sell it at 6. That's just not what I like to do. But I think if you look at how everything has been about financialization for 40 odd years, increasingly so, you know, I think we're going back to a world of real tangible things. Commodities are so undervalued against stocks that I think they're going to have a tremendous tailwind. You know, I think people are going to start stockpiling copper. I think silver is going to be a massive bull market, and I think oil. I think the price of oil is going to go higher. I think down here it doesn't suit many people who produce it to have it down here, and I think it's with the as the green energy revolution starts getting rolled back as people realise that we can't afford it.
Did you see what Bill Gates said the other day as well? Yeah.
Which is look. I mean, Bill Gates is a smart guy, but it took him that long to figure that out. I mean, really? I know. We've all, unless you're 100% climate change zealot, I think you've understood that there has to be a trade-off somewhere. And yeah, we'd love the world to be green, and we'd love there to be no pollution.
Yeah, but if it's going to cost
you can't
25
mandate
trillion
it.
or whatever, it's,
Right.
yeah.
So, I think I think it's tough to go wrong owning commodities for the next 5 to 10 years. You could be wrong in the next month, and if the price is what you're focused on, you could get chased out. But again, I'm not a speculator. I did speculating for a job for 30 years, and it was great fun to do it with other people's money. I've never done it with my own.
No, it's good though, because you're obviously looking at a long-term cycle here.
I think so, yeah.
Yeah, no. Well, it's in terms of your own strategy, you have these, you sort of have a vision of where things are going, and like you said, it doesn't really matter. So long as you're not playing the short game, you should be okay in the long run, which is very similar to what we just had Rick on. He's very much of the same mindset. He invests in 5-year plus periods, right? Yeah. That's where you make.
And look, Rick's a genius at this.
Yeah,
right?
He really is. Yeah.
If Rick tells you how he invests, follow Rick.
So he told me he was still piling into Cameco. This was back in August, and I don't know if you've been following Cameco at all.
I haven't,
but oh my God, well, he was right to do so. Let's put it that way. Yeah. He's done very well. Wish I listened to it. I wish I bought some more. Just going back onto, again, obviously we don't want to put our tinfoil hats on too much here, but you look at the state of France, you look at the state of Germany. Obviously we're Brits. We're not in a great position here in our own country. Obviously Canada, I think they've just sorted out their own budget. That I'm hearing some rumblings here of some Canadians saying they're not particularly happy with what's going on over there. Obviously, US has its own problem. The Western world seems a very fragmented, I don't know, it's a different place than I remember it to be, and even when I was younger. Do you get a sense that we are close to something major happening that might reset the monetary system? Because
Yeah, I do. And I think, again, you run into that problem of inevitable versus imminent. I think it's inevitable because A, it's happened constantly over time. B, it tends to happen at periods like this when people have lost trust in politics, lost trust in government, and lose trust in money. That tends to be when the system resets. And it also happens when you get massive disparity between the rich and the poor. So we've ticked all the boxes. And if you buy into Strauss and Howe's fourth turning, generational theory, we're right there at the fourth turning when institutions get torn down. And so I think we're seeing it all. It's difficult for a lot of people to put it together what we're seeing because it all feels isolated and it all feels frightening. And if you can't find the pattern in it, if you don't understand that it really is pointing to a reset of the system, and the system means different things to different people, but realistically, there's that old quote about the goldfish. The two young goldfish swimming past, and the old goldfish swims towards them, and he says, "Yeah, morning guys, water's nice today, isn't it?" And the two goldfish swim off, and they go, "What's water?" Because that's the world they swim in. They don't know what water is.
No.
And I think the way the world is changing is such that it's shaking our understanding of the only world we've ever known. We've only ever known a purely fiat world. I was 4 when Nixon broke the link to gold. I'm almost 60 now. So to have been, sentient, to have been investing at that time, you need to be in your 80s. So for anyone below that age, all we've ever known is a pure fiat world, debt increasing, supposedly low inflation, falling interest rate. This is all we've ever known. So suddenly you're faced with, rising interest rates, higher cost of housing, higher cost of living, politicians that don't seem to be trustworthy anymore. Your money doesn't go as far as it did. You know, challenges to the UN, which you always thought was an institution that had been there forever. All of this stuff, in and of itself, in isolation, is, well, that's scary. I don't understand that. But if you can step far enough back and think, okay, this is what a reset looks like. All these bits have to be pulled down before you can build something that's not new, because we're going to go back to the things that worked before, but it's going to feel new to all of us. And change is frightening. We, as human beings, we don't like change. We're frightened of it. We don't adapt well to it. So it's a scary time. And I think we're right in the middle of that now.
Interesting.
It doesn't mean on the other side of this change, there isn't a very lengthy period of expansion and growth and all the good things that we want.
Yeah, I agree, because I've seen so many articles comparing the 50s to sort of where we are now in terms of, you look at inflation, the way that an individual in America could live off one salary.
Oh, and West Ham were good back then as well, right?
Oh, we peaked.
60s?
We peaked. Well, we were great in the 60s,
There you
and
go,
then
pre-inflation.
I think we peaked. Last FA Cup was 1980, wasn't it?
Well, you beat us in '75 at the cup.
Well,
Let's not talk about that.
I weren't around. My dad was at the. My dad was at the 1980
Yeah,
final.
there you go.
He had a good night. All right, why don't we end on something a bit fun? Who's winning the league this year?
Arsenal.
Arsenal, yeah.
Yeah.
It's got,
I hope so. I don't want to see City win it again, and I'm bored of Liverpool winning it now.
I was going to say, don't think Liverpool can pull it back?
No, I think it's Arsenal's year. I hope so. It's not Fulham. All I know is that, and that breaks my heart. But I'll get used to the idea by now. I never will.
Yeah, well, it's obviously not going to be West Ham either, so that's
No,
fine.
afraid not.
Grant, thank you for your time, mate.
Mate, great pleasure.